I noticed FedEx down over 8% this morning. Worst day it's seen, at least so far, in 10 years.
Yeah, we're down 23% on the month overall here. 2-to-1 advancing to declining stocks. Remember, we get a little Fed drift going into the Fed meeting. Market tends to rise. Take a look at the sectors. Transports are down, of course, on the FedEx statement, but energy doing a little bit better, consumer staples a little better, healthcare a little better, banks are flattish, and semis down. Of course, Micron's taking the semis down here. FedEx is the key story, as David mentioned. Here's the key sentence from their earnings commentary. Global trade has slowed in recent months, and leading indicators point to ongoing deceleration in global trade near term. There's the FedEx statement, if you can put that up, and that's the key story that we're dealing with today. Transports all down on that. FedEx, UPS, Expeditors of the logistics companies, C.H. Robinson, also to the downside on that here. We have seen a modest downward pressure on overall earnings for 2018, the fourth quarter numbers. So we going in, remember, we've had 20% earnings growth for all the quarters. We had that going in to the fourth quarter. It's now come down a little. It's now 16%. This is not atypical. This is a little heavier than normal. We want to watch the 2019 numbers. Still about 8% earnings growth expected, but nobody's taken down the numbers in 2019. This FedEx comment, very interesting, and that may be the start of all of this. Where's the buyers going into the close? Every day I've been talking about these buyers' strikes where no one seems interested in buying stocks. So hedge funds are in redemption. They don't seem to be big buyers. The market makers, when you get this kind of volatility, they try to limit their participation. The retail investors, mom and pop, they're kind of frozen. How about institutions? Well, you know, pension funds, their books are slowly getting closed. I don't know how active they're going to be. This leaves the corporations. They're the buyback story here, but there's limits on how much they can buy back on any one day. I mentioned this yesterday. We're at a new world record on buybacks, for good or bad. 1.1 trillion in announced buybacks. 800 billion has already been repurchased this year, so we have about 300 billion in unused buybacks. My point is, they may be the marginal buyer going to the close. We've seen a number of big buybacks announced, including, you heard, Johnson & Johnson. How about the Fed? Good heavens, I have never seen such fights over what's going to happen with the Fed. So here, there's two paths here. They want a hike and then stop. So if the Fed hikes, then signals fewer rate hikes in 2019. That's what the market wants. But what happens? Do we get a rally, or is it already priced in? Or maybe they're not dovish enough and the market goes down. That's a problem. And then there's the camp that says, don't hike. This is what Gunlock says. We'll stay data dependent. Okay, that sounds like what the market wants, but then people complain to me, no, Bob, that could sell off the market because of fear that the Fed sees slower growth out there. So nobody can agree. Normally, if you get these facts are going to happen, X, Y, and Z, the Fed's going to do this, what happens to the market, we all kind of know. Now, everyone has a big food fight because nobody can quite agree on what would be bullish or bearish for the market. That's how confused are. We'll find out. 2 o'clock Eastern time. Right now, the Dow's just near the highs for the day, up 75 points.